All right. Good evening, everybody. Hope you're doing well. Thank you so much for joining us today. All right. So to get us started, first and foremost, what we're going to talk about today is really want to share with you some really critical strategies. And part of the way that I like to teach a lot of times, I like to show real. And so part of what we're going to be doing this evening is I have a guest with me who's one of our clients, an investor that's actually done business with us in the past, and has kind of fallen in love with our philosophy. So not only is he working with us, he's actually doing deals right now. So today we're going to talk about some of the key fundamentals of investing, what you should be doing, but then we're going to transition right into showing you an actual case study with Todd. So Todd, say hello to everybody for me.
Hey everybody, thanks for having me on, Rick.
No worries, man. Thanks for joining us today. So in a minute, I'm going to call upon him to actually start sharing some of the information on his actual project, but to get started, the first thing that I want to do today is really change the way that everybody thinks about investing. You know, if you really think about it, in most cases today, when you hear about investing on television and you see the guys on Facebook and you hear about all these people, it's this little fancy way of, you know, talking about get rich quick and everything else. And let me be honest, there is a great opportunity for you to be very wealthy if you invest in real estate. However, what most people completely forget is that in order to have glory, you have to go through the battle. And if you're not careful, you can die in the battle before you can have the glory. And so part of that is understanding as an investor the right strategies that are going to position you to be successful through the good times and the bad times. And so as I transition and show you our business model, I want you to understand some of the things that I'm going to share with you today. They're not because I'm this boring investor or that I'm extremely conservative. They're because I still have wounds from my past experiences. I still deal with headaches from before because I wasn't prudent when I started investing. I was very aggressive. And so those experiences have refined my strategies. And because I've adapted, they've put me in a position that I can capitalize on today's market trends. And so I hope you find this information very useful. So Todd, you ready to roll, brother?
Yep, ready when you are.
Awesome, awesome. All right, so let's get going. So first and foremost, what I want to do today is kind of give everybody a visual of one of our business models. And so for those of you that have followed us, you know that we're an active real estate investment company. So we buy deals, we fix them, we flip them, we rent them, we buy commercial, and so on and so forth. But then we also have another arm, which is a lending arm. And that arm specifically focuses on lending money to other active investors just like Todd. And so the reason why that business model actually grew and expanded was because we realized as we were diversifying in our investments that lending money was one of the safest investment strategies that produce passive income every month. And it also created a win-win. And what I mean by that is if I loan money to Todd, Todd gets to invest that money to projects, but Todd pays me every month, as you've done for many months, right, Todd?
Oh yeah, several years.
Several years. So thank you for those payments, by the way. I really appreciate it. I paid for Kaylee to go to Disney. But the reality is, though he's paying me my yield and he's paying on time and he's a great steward of that, it also gives Todd the ability to scale and grow his business to be very successful. And so one of the beautiful things that I love about our business model is that we get to create a machine that continuously feeds different types of investors. So I'm going to show you a visual of what this looks like on the screen. And so to begin, what you're going to see right now, it looks like a figure 8. This is really our business model. So to kind of give you a picture, we currently have about $35 million of capital committed to do private lending. And that's money that we've raised that is committed to investing in private investments such as deals and that we fund like Todd. And so what ends up happening is an investor like Todd would come to us and say, hey guys, I'm an active investor and I have a deal. And so he submits a project for our team to review and begin to analyze. And so whenever we look at the preliminary details and we feel comfortable with the deal, then we take on the next step of processing. And as we process the deal, we make sure that we feel comfortable with Todd, his experience, and the project itself. Then it goes to underwriting to really make sure that we've done our diligence. Now, a lot of people think of underwriting and they kind of get a little frustrated because they think that we're vetting the individual. And while you're right, we are going to make sure that Todd is somebody worthy of working with us. But at the same time, one of the things that I want to bring up to you that's so critical is that if you are an investor and you're buying, call it $5-6 million a year in real estate properties, you're pretty seasoned, but you don't know everything. In the same way we are with all of our transactions. We deployed over $22 million in Florida last year, and to be honest with you, we don't know it all. but we've seen a lot of different transactions. We've seen people lose money, and we've seen people make a lot of money in the space as well. And so the reason why I shared this with you is because our underwriting team, using the experiences of other clients, of our own, and of all of the projects that we work on, what we actually do is we end up providing mentorship and information for our investors to make sure that they are protected as well. So when Todd borrows from me, if our team doesn't feel comfortable, we're going to share that with him so that we can protect his investment as well. And that's a great resource that we've learned is very valuable for investors. Now, of course, once that goes through that process, we fund the deal, we pull the trigger, we start moving forward. Now, I'm one to say that, hey, I like passive income, so I don't like managing or chasing my clients. So we have a third-party company that services those properties. So that means that every month they collect payments, they deposit in my account, they debit it from Todd's account, and Todd does this thing, okay? Now, that is what we've been doing for a very long time now. However, what ended up happening is that we started getting phone calls from investors that started saying, hey, wait a minute. I love your model. You guys know how to make money. And how do I make my money work for you? You know, and the reality is we've already got $35 million. So really, we really started putting together a new product to say, well, what if we started selling off a percentage of our portfolio to other smaller investors so that they can participate from our bank, from our private investment platform? And so then investors started approaching us, from individuals with 50,000 all the way up to literally institutional groups committing $20 million with us. And what they end up doing is they end up buying a mortgage. If not the whole amount, sometimes the big institutional groups will buy a percentage depending on the transaction. Then, of course, they start receiving cash flow. And once the borrower pays off, so when Todd sells a house and he pays it off, they get their money back, and then they have the opportunity to redeploy. So what you're seeing here is literally a business model that is very attractive for both active investors that want to scale their business and passive investors who may not know how to do this business very well, but they love the yields that it attracts. And so this is the cool thing about our business. We get to see the active side and we get to see the passive side, and we take that information and that knowledge and we impart it into our strategies. Now, another thing that I like about lending money and going in this industry is that it creates some really unique opportunities. And I don't know, Todd, if you and I talked about this deal, but I'm going to share with you right now on the screen. What you're looking at here is a project in Orlando. I don't want to go into too many details about this particular project, but this is a project that we financed. We gave a loan, a private loan for this investor. And just to give you perspective, if you're looking on the screen, this guy bought this project in 2013, got a steal of a deal, an amazing development project that was already in phase 3, which means that phase 1, 2, and 3 had been built, and then the developer went bankrupt. So this guy got all the parcels that you see lit up on the screen for a very good price. And as he started developing, he realized he needed more capital to finish what you're looking at where the screen says $32 million. That's literally 140 townhomes. And so long story short, when we funded this deal, it was supposed to be a short-term strategy. And unfortunately, one of his partners bailed on him, so he had to come back to us, and we started structuring a brand new venture with him. So lending not only gives me the ability to get cash flow, it gives me opportunities like this that really give us a great upside potential. And if I told you that I have $1 million invested in this project and the actual land alone is worth over $14 million, would you agree, Todd, that that's a pretty darn safe investment?
Yeah, that's amazing.
In fact, my worst case scenario is my best case scenario, though that's obviously not our strategy as a lender, but just to give you perspective. Now, as I talk about the philosophies, one of the things that I want to show you right now, what you're seeing on the screen here is what we call Capital City. This is literally a small depiction of the variety of projects that our company has been involved with in whole or in part. So we've done development projects, residential homes. So when you see these little parcel samples, they just represent a grouping of residential properties that we've either purchased or lend money on. And so when I tell you that we've done a lot of transactions, we've been involved in a lot of transactions, but I don't want to say this to boast. I want to show you this visual illustration because a lot of companies haven't had this kind of amount of business that they've done. And the reality is, I wish I could tell you that every one of those transactions was a home run success. So what I'm sharing with you today is the reason why I believe so much in diversification in our strategies is because these very projects have taught me that I don't know what I don't know and that I can make a lot of mistakes if I'm not careful. So today, don't look at this and be impressed by Rick and say, wow, look at all the deals this company's done. Look at those deals and just imagine blood, sweat, tears, and experience from failures. What you're seeing on the screen is failing forward at its finest. And I want to tell you that after all of those struggles, after all of those battles that we've been through, And all the successes and failures, what I can tell you is this: if you are a flipper and that's all you do, you are completely exposed. If you're a landlord and that's all you do, you're completely exposed. The key to success is diversification. Do it strategically and make sure that your money begins to work for you as quickly as possible so that you don't have to work for your money. So if you know me by now, understand that the key to success is what I call the 40-40-20 plan. In this plan, you're going to see that 40% of all of our projects are appreciating assets. And today we're going to talk about a live case study with Todd, the deal that he's doing right now as we speak. And the reality is those projects are opportunities that make your money grow very quickly and give you a pretty reasonable profit. Typically within 3 to 6 months is what I shoot for when I look at this bucket. The other 40% is passive income, is cash flow. For me, lending is the #1 strategy. In a minute, I'll share with you a few more strategies that you should also be considering. And then lastly is when we get the higher risk, high reward. And these are opportunities like that development you saw earlier that give you the ability to potentially quadruple, if not infinitely grow your business for long term. But the problem is if you chase it, you will lose everything you have if you don't have the 40-40 in place first. So now, enough about what we're talking about here, Todd. Why don't we break down your deal? So what you guys are seeing on the screen right now is literally, these are the numbers on a project that Todd purchased. And I want to break down the numbers quickly, Todd, and then you can tell us the story.
Okay.
What you're seeing on the screen is we broke down our analysis based on an all-cash investment and a loan investment. So in other words, what does it look like if I bought this all cash? And what does it look like if I borrowed from his? And so what we're looking at here is Todd bought this property for $115,000. His renovation budget is $22,000. So his total capital investment is about $138,725. And of course, based on comparable sales, his values are about $195,000. So if he did this deal all cash, he would make about a 29% return on his money. Now, let me tell you, if that takes 6 months, Todd, that's a home run, right?
Yeah.
Awesome. Now, let's look at the power of leverage. So this one you didn't do all cash. This one you borrowed from HIS. And so the reality is, if you stayed in this deal for 6 months, instead of doing the whole investment, you're only putting in about $56,000 and change, which increases your return to 55%. And it leaves another 82 grand in your bank to do whatever else you want to do, whether it's more deals or buy a rental or diversify. So tell us the story, Todd. How did you find this deal? How did you negotiate it to 115? And tell me the story of how you worked this deal.
Basically, this was one I got off of social media. A lot of people, I have followers that know I invest in real estate, and this was a friend from high school, actually, from 30-some years ago. It was his childhood home. His mom was moving to a condo on the beach and just wanted to dispose of the house and needed a lot of work. And so basically just from social media marketing, getting the word out there, I come across it. And yeah, it needed a lot of work, so I was able to get it down to 115. Originally she wanted like 125, but there's a lot of, she knew it was a lot of work, but I knew that I could actually do it cheaper, so it worked in my favor.
That's awesome. Now, do you have your own crews, or tell me about how do you set your teams up to do the actual repairs?
Some stuff I sub out, and some of it's me and my son. He's a firefighter, so he only works 2 or 3 days a week, so he'll work with me. We hang some cabinets, do some painting, hang some ceiling fans, but anything major, like I had to get a new roof over the back patio. That was like $2,500. That I'll sub out to a roofer. So just on a case by case, some things we'll do, some things we sub out.
Got it. So, I mean, this is a great deal. I mean, the thing I want to share with people is, you know, these are great numbers. And I know you and I were not too long ago talking about a project you did before where you did really good on like 3 or 4, and you had this one deal that took an eternity. So obviously, you know what it's like sometimes. Not all of them are home run. Would you agree? Yep.
I've seen both sides of it. They're not all easy. Some are like so simple it's easy, and some are like pulling teeth.
I completely understand. That's the reason why it's so important to have multiple deals so that you're diversified. That way, if there is one that's like pulling teeth, you know, the burden is not just on that one deal. Would you agree?
Exactly. That's the best thing about not putting all your eggs in one basket. This way, I've got money free to do another project instead of dumping all the cash into one single project and have it be one of the disaster houses. This way, you can diversify.
Exactly. So now let's take a look at some of these pictures. So Todd, this is the condition of the property. Obviously needs some updating. So just so that everybody can see on some of the pictures here as we're talking about it, Tell me a little bit about what are you going to do to the interior of this property to modify this home and really bring it to the value of 195,000?
Really, this one was pretty good considering most of the houses I get, it's just mainly cosmetics. Like outside, I mentioned I got to redo the patio roof. It was leaking around the chimney. So I got to get the flashing around the chimney repaired, put a new deck on the back patio. I had to put on some new soffit. And I'll repaint the outside and a little bit of landscape, and that outside's basically done. Inside, two of the bedrooms and one of the bathroom are already tiled, which was a plus for me.
Okay,
So,
I see that in the picture, yeah.
yeah, so I just got to tile the master and the master bathroom. And about the biggest expense, I got to redo the kitchen, obviously. Put some new cabinets in there. I actually wanted to take down that wall that you can see where it faces into the living room, but turned out it was a bearing wall. So,
Ooh, I see what you're saying, yeah.
yeah, it would have really opened it up nicely, but that's things you got to make sure you look at before you go ripping walls down too.
Yeah, no, I agree. I agree.
But yeah, I'll put a new kitchen, new appliances, and I'm going to put down some new flooring and paint, and it's basically done. It's a lot better than a lot of these I come across.
Yeah, no, it doesn't look too bad actually. Now that I look at the picture, so that's awesome, man. Well, so let me ask you a question. So obviously, this is a kind of one of those cookie cutter deals. You're going to repair. You're putting about $56,000 to come back with another 30. I mean, that's a great day in the office as far as I'm concerned. That's somebody's salary in the whole year. So walk me through when you make that profit. I know that you hear us talk about it all the time in diversification. Do you have a plan? What are you going to do with that profit?
Part of it I'm going to roll into my next flip, and I'd like to get in to have some rentals, as you say, to diversify, have some cash flow coming in for the long term, but I'll put some of my profit into my next flip.
Awesome. No, I love it. I love the fact that you're thinking through it. And so, one of the things that I'm going to break down for people is, because I think they need to understand, and I know you and I have talked about it in detail, but some people may not see it, but what you're seeing here, guys, on the screen right now is literally, there's really 3 key strategies in the real estate space to begin to invest in cash flow, right? And so what I think is imperative to understand is that the faster you generate cash flow, the faster you get to financial freedom. And it's really something that I have such a huge conviction, because I feel that had I focused most of my efforts in the beginning of my career on doing that, I can't even imagine the amount of cash flow that our company would have just from those investments. And so I want to save people time. I want to save people heartaches. Great flips, things like this are awesome, like we just shared. An amazing deal, quick turn deal. But definitely I'm glad to hear, Todd, that you're listening to what we're saying and that you're taking some of that money to invest it into private investments that are going to produce cash flow. And so, guys, he talked about a rental property. We really believe in the 3 core prongs of cash flow, which is number 1, private lending is my favorite investment strategy. Rental properties, of which we also own rental properties, and I believe in that as well, because again, it produces some pretty substantial cash flow. It is a little bit more intense as far as managing the projects and so forth, and there could be issues and repairs and things that you have to deal with. But I think it's well worth it as a part of your strategy to build cash flow. And then lastly, commercial. A lot of people in this space are trying to figure out how to get in commercial, but they're intimidated because they think of an office building or commercial industrial properties. And though we've done quite a few different projects, if you're going to get involved and you're considering getting in commercial and you're saving some of that money, you may want to consider some multifamily, just dealing with maybe an 8-unit, 12-unit apartment complex. I know we have a couple of those deals in the pipeline. I know Sam, one of our guys in the office, is working with one of our repeat clients, and in fact, we're financing next week an 8-unit apartment complex. And so the beautiful thing about that strategy as well, guys, is that it's not that big of a project. I think the loan amount on that, it's like almost $300,000. So we're not talking about a multi-million-dollar deal, but now they have 8 units that are producing cash flow, and so that brings diversification, right? That gives you the ability to have multiple tenants. So if you have 1 or 2 vacancies, it doesn't really impact you as much. But at the same time, when I look at those multifamily deals, I go back to lending, because I'm like, hey, I'll give you a loan for $200,000 to $300,000 on an asset that's worth $500,000-$600,000, and you can pay me every month, so I don't have to deal with any of the headaches, right? So I think the real key to success here is like Todd is doing. He's flipping this deal, he's making some cash, and he's putting that money into passive investments so that he can generate that cash flow. And so I'm going to give you guys an illustration of what the next level is for all of us. And this is something that we're doing as well. And Todd, thank you for joining us. I know we talked earlier and you said you're going to be a part of this, and so I'm really excited about this. But one of the things I want to share with you is, why do we make money? If you really think about it, most of us make money to make a better life for ourselves. We want freedom. We want time. We want to enjoy things. We want to own nice things, right? And so, but if we're not careful, what ends up happening is we become self-absorbed, and then our purpose becomes smaller than us. And the moment we do that, we live a life of existence instead of a life of purpose. And so my heart has completely changed towards this. I've been always driving towards high goals, and don't get me wrong, I'm still very driven. I still want to take the business to the next level. But I've realized that success, by definition, is something completely different than what I thought when I first started my career. And what I really want to challenge people to do is to really look at your life. And if your life is self-absorbed, do something bigger than that. Think about how big your life could be if you actually lived it with purpose instead of existing on this planet. And so one of the ways that you can do that, I'm not saying, hey, here's an offering plate, give me your money, don't donate your money. What I want to do is introduce you to a concept that we're doing now as a company, and we're challenging some of our existing clients to join us on this journey. And so right now, what we're really focused on is building a legacy in many people that are out there and helping them to level the playing field, because the reality is there's many places right now, and not just overseas, even though there's a lot of need out there, there are a lot of needs here in the U.S. as well, with people were not born with the same conditions. They were not born with the same resources. They were not born with the family members that could back them. There are a lot of people on this planet right now with absolutely no support. And how do they get out of this hole they're in? Well, they get out of the hole they're in when somebody actually cares enough to reach down and lift them up. And so the reality here, what we're trying to do is we're trying to show you that if you look at your money is like a seed. And unfortunately, most people, when they get emotional about a compassion project, for example, they take that money and they give it away to help somebody. And don't get me wrong, that's extremely noble. And we respect people that do that. But the problem is, once you give your seed away, you've got nothing else to give. So our challenge to investors today, just like we're challenging you to diversify from flips to rental properties so that you have income, we want to challenge you to sow your seed of capital to invest, nurture it, grow it. And out of the proceeds of that profit, then you take from the fruit and you give to somebody who has need, and you help them to go to that next level. And that's really what investing is all about. And so our objective right now is to create a platform that allows investors to trade and do business, both from active and passive investors' worlds. And so that as they transact, they can commit a percentage of their profits towards these types of needs in the marketplace so that we can make an impact. And so, for example, if you see this project here that we funded, it's over $475,000 transaction, we're committing a percentage of those proceeds to immediately go into this group called Mana Worldwide. In fact, Todd, that's why I'm going to Ukraine. We were talking about it. We're investing in Ukraine through our own investment platform. And we're challenging those investors who are in these projects to take a percentage of what they're making, not of what their money is, but of the profits their monies yield, so that they can make a lasting impact in the lives of others. And not just abroad, but we also want to impact local markets as well. So here's an example of another group through a small deal we did in Orlando, Florida. And we are actually helping to support the Ronald McDonald House. And so this gives you an example of what you can do that goes beyond you. But you don't have to waste your seed. You can sow it, grow it, and bless other people. And that's really my heart today, is I really want to challenge us to invest smart, build long-term residual income for your business. And then out of that profit, invest in the lives of those who don't have what you have. And Todd, I want to thank you. I know that you're getting involved with us. You're getting more involved with our company, and I'm so honored to have you as a client and as a friend. And I thank you that you're joining us on this journey to be able to bless other people as well out of the very projects that we do together. So I'm very honored that you're joining us on that. Thank you so much.
No, I think that's amazing that we need to give back. I mean, we're fortunate. We need to give to the less fortunate, and not that that's the reason to do it, but I mean, whatever you give comes back to you 10 times. You need to pay it forward, and I think that's great.
That's awesome, and I really appreciate that. And so what we're going to do, guys, as we wrap it up, I want to first of all thank all of you for joining us today. We hope that you've enjoyed talking about this case study and going through the fundamentals of investing. As a company, we really want to make sure we're sowing seeds to help people really grow and expand in their business. If you guys have any questions about the deals, how to analyze them, how to get funding for those transactions, or maybe even you want to just get involved in some of these investing with purpose projects that we're involved in right now, by all means, feel free to email us. You can go to our website, hiscapitalgroup.com. You can call our office at 407-347-6461. And you can look up Todd as well online. And so we'd love to, Todd, I know that you're an open book and you want to help people out as well. So I'm sure that if we get some requests and somebody needs some guidance on how you run the numbers on repairs, is it okay if I put you out there and say that you'd be willing to answer some of those questions?
Oh yeah, absolutely. Like I say, I'm here to pay it forward. I don't mind reaching back and helping somebody any way I can.
That's awesome, Todd, man. I really appreciate it. So Todd, once again, I want to thank you. I want to wish you the best of luck on that transaction. And for those of you that can't see, I'm going to show you one last thing real quick, since we're already in the spirit of showing information. What you're seeing here on the screen is literally Todd's project. This is our tools that we use to organize and manage our projects. And so you could literally see here from a glance all the details of all the due diligence we did, all the communication that we had to go through in order to make sure that this was a sound deal for Todd. I'm convinced, my man, this is a great deal. This will be a home run for you, brother. And yep. I'm excited, man. You know what's amazing? I don't know if you noticed this, but on your project, on that property that we just talked about today, we've collected over 54 documents of due diligence to make sure that we were comfortable, not only with, obviously with you, because we already know you, but to make sure that this project was safe and that our investors were going to be protected on the passive side along with you. And so that's something that most people don't get to see, is this kind of visual. And I hope you guys really learn from this. It's a system that helps you to protect yourself. And it's implementing that system that really creates financial freedom for other investors. So guys, I want to thank you for joining us today. Again, if you have any questions, feel free to message us, and we look forward to connecting with you soon on our next webinar. Thank you, Todd. I appreciate you.
Yep. Thanks, Rick. I appreciate it. It was a pleasure.
Take care, guys.
Goodbye.